All right, let's start today's session. Welcome, everybody. We will be discussing one of the underdog concepts in Elliot. It's called riding the macro wave 5 because there is a saying in the financial industry or like in financial markets in general that 90% of the gains are made during the last 10% of the move in the markets. Now, what does that mean specifically? Last 10% move of the markets. Um, Throughout history, I can show you certain cases where the people who were like early in an asset, they did not make as much gain as compared to those people who were entering, let's say, in the last 20% time before the big bust kind of happened. So going back to Bitcoin, what I mean by that is if you were like an early comer in Bitcoin and you entered somewhere around here when it was like trading at $324, right? And let's say you entered in November 2015. Now you must feel pretty good when Bitcoin hit 20,000 eventually down the road. But for somebody who rode Bitcoin from 324 to 2015 till 20,000, they will let you know that they had to hold through excruciatingly long sideways process before the rally actually started happening. Okay, so if we play this thing out, this is on October 2015, and this is like a 2 week candle. So every candle which is being printed, it takes 2 weeks to actually play out. So we are entering 2016 now. This is February 2016. So if you entered here on this massive pump in November, price literally hasn't gone anywhere. It's sitting right there at 378. And it's been about 4 months since you've entered. It may look like, some kind of movement has happened, but it's really not a big movement for price. And you're still like way beyond previous all-time high, which is sitting around there. Okay. Now back then, not many people, I would say like 99% of the people probably didn't know that Bitcoin was going to go to 20,000 for the next cycle. They were probably thinking that, okay, it traded at 1,160. It corrected like 90%. So next cycle, it could probably double the amount. And from here, go to like 2,000, which is like 400% gain, which is amazing, like for any shitcoin asset class, because Bitcoin was like a shitcoin back then. 400% is like amazing for anybody to profit off of like one investment. So when it was going, this is May. Now, how many people would have puked their position just because this liquidity pool got taken out and you had this massive correction? On price is basically not a whole lot up from here. Sure, it's like up 50%, but from a price perspective, it's not a lot. Like $50 move is probably not a lot. Or let's say $100 move. But let's see how it plays out. We're in October now. This is seasonally like bullish for crypto, October till December. And that's a new all-time high. So from October 2015 till February 2017, you have basically held Bitcoin for more than a year, 1 year, 2 months. And in 1 year, 2 months, it has basically managed to recover from this bear market and make a new all-time high. All right. That's 1 year, 2 months. And we're just beginning the bull run. Like, it's at 1,257, and it's nowhere even close to, like, getting parabolic as it's supposed to be, as we remember how strong the 2017 era was. And we're just like in 2017 right now. This is February 2017. And I know for a fact that Bitcoin hit 20,000 in November 2017. So for 1 year, 2 months, if I held this position, starting from here till here, it has given me 200% return in 1 year, 2 months. Now let's play it out. This is March 2017. Now it's starting. Okay. It has even crossed like $2,000 mark, almost touched 3,000, and we're in June 2017. So for reference, let's mark the next correction which is going to happen in the market. Here, this is a correction, right? That you had a pretty solid pullback. So this correction, this bottom, was printed in July 2017. Okay. And we're going to map that out here, July 2017. So from here to here, a major cycle has likely elapsed, and you had a massive correction before the market gets pumped up again. So the time period which has unfolded from here to here, it's about 2 years. Okay, in 2 years, Bitcoin has given you 572% return, and we're sitting at 3,000. So this top was the all-time high top. Now, would you agree that the top was printed on December 2017? Let's just put that level in mind here. From this time, July 2017 till December 2017, the time period is 6 months. I mean, could you really say it's 6 months? Yeah, you could say it's 6 months. Not even 6 months, it's like 5 months. 6 months would be like, if you actually transcended into January, but I would say like, July, August, September, October, November, because it's like this month was like December 4th, and this all started in 18th of December. So till like the first few days of December. So you can technically say like 5 minutes have gone where this entire rally happened. Now this is the power of macro wave 5. You held through this little teeny tiny bit of price action for 2 years, but the big chunk of the move, which is this massive 900% move, it transcended in a period of 5 months. That is where the saying which I was giving you earlier in the beginning of this lesson, 90% of the move for the entire cycle happens in the last 10% of the time period. This is the last 10% of the time period. This is the first this is the first 90% of the time period. Like, the real move started from here, but the last top was printed over here, November 2013. So from November 2013 till November 2017, this was like the last cycle time period where price was like accumulating. And even when it's like, was being bought back up, I was zoomed in, I could tell you that, it was like accumulating, and then it eventually started to pick up. But it really started picking up in July 2017. That is where the macro fifth wave was playing out. And the macro fifth wave of the terminal end of the cycle generally has a lot of velocity to it. It has a lot of push to it. It has a lot of, euphoria to it. That's where you feel maximum greed in the market because everybody's thinking that this is going to keep going, it's going to keep going, it will explode, it will explode. And you see headlines coming into newspapers, you see headlines into social media, like you're hearing it from your grandmother, you're hearing from your neighbors, you're hearing it from your taxi driver. Everybody is like running on the hype train because you see price going vertical every day. And every day it's like up 10%, it's up 20%, it's up 30%. And you're like, I'm missing out. I need to get in. Now raise your hands if you felt this thing in your past 3, 4 years of trading. Like properly raise your hands with an emoji or something in the chat and be like, I felt this thing in the past with any asset class, not Bitcoin, like any asset class it might be. Okay, so what I'm going to do is I will map out the Elliott wave for Bitcoin just to show you how you can tell if price is going to be entering the macro fifth wave. Generally speaking, macro fifth wave is the last terminal macro wave which happens in the market. Now, would you agree that this mini cycle is like the first wave in the market, starting from like January 17th till like April 2013? It's like a little spike, then a collapse sideways, and then another push before a collapse happened. So I'm talking more so starting from this point, October 2011. This is like a 1, that's a 2, this cycle is a 3, and this collapse is a 4. Would you agree that this is something you can get on board with from a cyclical perspective? Okay, good, 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 good. Now, what's my point in this case? Why am I like going so far back just to like map this thing out? Now, you also would argue that wave 4 actually went in the territory of wave 1, so wave 4 should not be considered as a wave 4. But there's a exception. Wave 4 is allowed to overlap the wave 1, in which case, if you go into the concept archives and look at the rule set, which I've posted, initial wave 1 push, yes, that's correct. So this is only allowed if you are considering this entire cycle as a bigger wave 1, like that, right? So if this was an initial wave 1 push, in that case specifically, you can have this wave 4 come into the territory of wave 1, which I did, and that's fine. Now, just because the wave 5, the macro wave 5 was so fucking strong in this case, it really opened the doors for mass adoption for Bitcoin. If Bitcoin would not have done such a massive macro wave 5, it probably would not have existed on this planet. It may have just died out because not many people would have come to recognize that Bitcoin actually exists. Okay, so the whole reason Bitcoin is in existence and it's like being popular and it's being adopted by every person on the planet is because this initial macro wave 5, which we're discussing, happened and somebody made it happen who was responsible for making sure that Bitcoin has a place in mankind history. Now, the way I view this Elliott wave count at the moment is that this is a triangle, or you could probably say this is like a ascending triangle, if you want to look at it like that. Whenever you see triangles being printed, they are wave 4s. They're always wave 4s. You could probably write it down. You will use it very often. Just like when I was posting the Elliott wave chart for BNB, I could spot this triangle like from a mile, and I could tell that this is a wave 4. That's how it always is. All right. So when a wave 4 is happening, you should be expecting like a wave 5 to happen after that, which means that is why retail traders always prefer to buy whenever like a breakout is happening from triangle. But what they don't realize is that they're putting their stop losses right below the triangle. So there's a tendency that after you complete this wave 5, there's an ABC correction, which generally happens after this wave 5 is done. And you do like a pullback of this kind, where you go back down and run the lows of the triangle. And everybody's like starting to believe that maybe this is like a top in the market or something. But what they don't realize is that it's likely coming to an end from a broader perspective, and you're just like anticipating like a larger pullback in the market. That's what happened over here as well. However, in this case, we never actually went down to take out these lows. When you did this breakout, we did get the ABC correction, which generally what happens with Elliott wave, that after you post a massive breakout out of the triangle, you would see like an ABC correction happen after that. So in this case, the Elliott wave count from this bottom, which is the wave 4 bottom, is like a 1. This entire choppy zone is like a 2. This is a 3. This triangle is a 4. And that's a 5. So far, is that clear? As in, like, this is a ABC correction for wave 2. Triangle is a wave 4. This breakout is a wave 5. And once you see the wave 5 breakout happen, ABC correction is basically the ABC correction against this entire push from the bottom, like that. Okay. So if we are dealing with a first wave of the larger macro fifth wave, what does that imply? What is going to start next? You should write your answers in the section for like what would you be expecting if you can spot a proper 1, 2, 3, 4, 5 bullish impulse from like a macro bottom in the market. What would be the next step you should be like thinking in your mind is going to happen? Yeah, so ABC pullback is done, yes, but specifically speaking, after you spot a bullish impulse, which is 1, 2, 3, 5 in nature, and you see the ABC pullback, what happens after that? Like there's a very specific template price follows when you are in a bullish environment. And we discussed that template in the last session, which we did for Elliott wave, which was the whole thesis of mapping out the entire, like where we mapped out the entire structure for S&P 500, starting from like October 2009, going to like present date. I showed that pattern again and again and again on how you could like get long on the market after you view that pattern. I know you know it. You should tell me. Or I think you're blanking out. I'll have to like give you a template to remember what we discussed. So remember the overall macro Elliott structure, which is of the higher degree, like a supercycle. We just spotted the first initial impulse, wave one, and we also spotted the ABC correction of the wave two pullback. Now we know this is going to happen, the big wave three, after the ABC gets put in. Now, how do you get on board with the wave three that's about to start? Now, wave three is supposed to be the largest out of all, right? Now, following this template, what happens next? Like, how does the wave three unfold? Yeah, you would use a fifth structure, but the subdivision, I'm talking about the subdivision. Yes, so we wait for the subwave 2 of the wave 3 push to get long, which is correct. So the wave 3 would unfold as a 1, 2, 3, 4, 5, right? You always have to assume that wave 3 will have its own subwave structure. So once we see the first subwave develop, we wait for the wave 2 pullback, the subwave 2 pullback of the first subwave, which develops for wave 3. Now, technically speaking, the first subwave generally needs to be formed above the initial wave one's high, because we understand that wave three is super fucking big whenever it unfolds. Right? Just because I was like drawing it like a small wave three, it doesn't really mean that it will like terminate all that. So when you form the initial subwave one, you wait for the subwave two for the pullback. And then wave three starts after that. So once you get it on the subwave two, you should anticipate this subwave three to have its own 1, 2, 3, 4, 5 as well. And it's gonna be like fucking strong. It's gonna be dead strong. Which will have its own Elliott wave count. Now this is as easy as I could draw it for you in terms of like a blueprint perspective. So you should probably save this and print it out and keep it on your refrigerator to like memorize it every day. Template for the entire supercycle. Elliott wave structure. Is that good? This is like knowledgeable enough. I posted the screenshot in the concept archives, so you should be able to view it. Now, using the same template, what I just discussed is that we are able to spot this initial wave 1, which has already happened, the first initial impulse wave. Then we saw the ABC correction. Now we wait for the first impulse to actually finish. And then we also wait for the second subwave pullback to be done with. And the second subwave pullback would generally come down to like 0.618 or 0.705. So using that same concept, which we just applied, what is this? Like I need specific names for the circle part. What would you call this? The circle region. It's the first subwave, yes. But of what? It's the first subwave, but is it the first subwave of the initial impulse 1 wave, of the third wave, or the fifth wave? The larger 3, yes. So it's the first subwave of larger wave 3. Now going back to the template so that it's not confusing, we're talking about this little guy here, the first one. And then we have to see the second subwave. Now repeat after me. What is this little blip? What would you call it? Yes, it's the second subwave of larger wave 3. Okay. Now, if you take a fib from this low to that high, it came to 0.5, which should have been like one of the buy entry points. But generally, you would see it come down to like 0.618. It didn't fall all the way there because it's a very new market. I would give it the benefit of the doubt that it should have come to 0.618, but 0.5 would do too. Now, what is this? What would you call this? This push? Now, this is where you gotta use your imagination and really think big. Think the bigger picture. First leg. Okay, so when you describe the first leg of larger wave 3, the first subwave of larger wave 3 is basically what you said, first leg of larger wave 3. So you need to have like a very specific name for the second one, which starts for the larger wave 3. In essence, what I'm trying to say is, if you go back to the template, the circled one, which is the micro here, this is the first leg of the larger wave 3. The red is the larger wave 3. I'm talking about this one, which is part of the subwave 3 of larger wave 3. You understand the question now? So you need to give like a specific name to that so that you when you communicate this in a professional manner, like let's say some other trader or something, like you need to understand what it's called. So I have a I don't really have a specific name for that particularly. What I generally try to call it is the microwave of subwave 3 because we already are designating this entire move as like the larger subwave 3. Oh, sorry, the larger wave 3 as like the first one is the subwave, which we mapped the subwave, right? So you need to give a specific name to like the smaller ones. Yes, so the microwave would be the smaller waves name for them, which is very tiny in comparison to the first one. So you would call it the microwave one of subwave 3. Like it's micro. It's just tiny. Even though it's like big enough, but it's tiny in comparison to like the first one. So then you see this blip happen with that. If you take a fib, where does it come down to? Can you spot like a proper ABC over here? Initial spike down to 980, which is 0.618, bounces. Second push down to 0.705, starts rolling. So this is a proper ABC correction. Like that. Now this is called microwave 2 because it's the pullback against the microwave 1 of subwave 3. And then the next rally, which pushes it, what would you call it now? You should know the name by now. So what is this called now? Yes, so microwave 3 of subwave 3. And then we have the microwave 4 of subwave 3. And then we have the microwave 5 of subwave 3. Now this completes the entire subwave 3. And you can see how fucking powerful the entire subwave 3 is. Like it basically forms the entire meat of the move, starting from this point till here. Just by itself, if you would have ridden the entire subwave 3 of the larger wave 3, you would have gotten 570% gain in the market. That's where the rally really had legs to it, which is a part of the macro wave 5, right? So from January 2017 to September 2017 was the microwave 3. Sorry, the subwave 3 overall. So we have the microwaves mapped out in between. Now I'm going to take that name out so that it doesn't confuse me, but you get the idea for the nomenclature on how to view it now. So in essence, what I'm suggesting now what would you call this wave? Now keep in mind, sorry, let me give some clarity. This is the subwave 3. Okay? Then what is this called? If we just finished the subwave 3 and we got a pullback after that, what is the next push called after subwave 3 finishes? I'll give you a hint. It's not hard. It's a very simple question. Yeah, subwave 5. It's that simple. So it's the subwave 5 of the larger wave 3. So basically what I'm saying is, starting from this bottom, it's a 1, that's a 2, that's a 3, that's a 4, that's a 5. Simple? Or like getting confusing a little bit. So what we did is we just mapped the entire wave 3 for Bitcoin in the macro wave 5 cycle. Starting from this bottom, all the way till top, that's the macro wave 5. All right, so what we're doing is we're basically mapping out the subdivisions of the macro wave 5. We started from this exact bottom, 1, 2, 3, 4, 5, first initial impulse, ABC, second initial impulse, sorry, second initial pullback, not impulse. In blue, it's 1, 2, 1, 2, 3, 4, 5 as a subwave 3, 4, then a 5. Hold on. Okay. So that blue structure completed the wave 3. And the wave 3 always has its own 1, 2, 3, 4, 5, which you just mapped out as well. So the initial impulses in between, this was the first subwave, third subwave, fifth subwave. Is that clear so far? It's good to go? Very good. Now this pullback, it was definitely a correction against this entire push, but it was very weak. It was a weak pullback, which means that the overall trend is very strong. Whenever the pullbacks are not like deep enough, you should consider them to be like you should consider the overall trend to be very strong. So that means is that we are about to unfold wrath and fury in the market, where this is the final wave 5. So 1, 2, 3, 4, 5. Oh my God. So just the final wave 5 push by itself was 250%, where Bitcoin went from like 5,000 to like 20,000. That's where most of you would have recognized that Bitcoin actually exists on the planet. And all the social media headlines were like flooding the market. So in essence, what we've done is we've mapped out the entire LFF cycle from the bottom, where this thing is a first wave, second wave. This 1, 2, 3, 4, 5 is the third wave, fourth wave, and this is the fifth wave. So kind of like that. Now, does this give you some appreciation on how powerful macro wave 5s can be? Where we just finished the entire cycle from the inception of Bitcoin, 2011 till 2017. So like a 6 year cycle. But the macro wave 5 was what put Bitcoin on the map. Yeah, I'll get to it. I'll get to it. Don't worry. So after that, the bust which happened, that was technically from a cyclical perspective, it was the wave two because we never actually like went down below this $1,000 mark. Like in order for it to be like fully capitulated, price would have to go below $150 mark to because it would have to like go below this wave four low in order to be considered like a bear market from a technicality standpoint. So even if like price went down like 90%, it still don't like technically enter bear market from like a much longer horizon perspective. So this bear market, like emotional bear market, lasted like a year and a half, maybe 2 years. But here's an interesting thing. I'll point it out to you. Once this wave two was done with, like the cyclical wave two, and we're starting like the next wave three, like keep in mind we're entering like the third wave of like a very, very large cycle, which started from like the inception of Bitcoin. Okay. Like I just mapped out the entire cycle of this wave one, the super cycle one. And from a super cycle perspective, this was like a wave two, which was supposed to end in like 2019. Okay. And this, guess what this is? I think you should be able to guess this thing. All right. Now we have something to deal with. So from this top, this was A, this was a B overall, and this was a C. Because this was unfolding like a triangle over here. And it's pretty easy to spot that this is like a consolidation for B wave. And then this breakdown which happened in the end was like the C wave. And then it accumulated. There was like this little punch up sideways price action. And then you can likely see from here, it's like a first wave, second wave, third wave, fourth wave, fifth wave. Is that clear? And what I mapped out? Now you have to understand the template that you're going to use now, because you will need to use this initial spike as the first wave, this as a second wave. This would be the first subwave of the larger wave 3, which is going to start. This as the ABC correction, as the second subwave of this 1, 2, 3, 4, 5. And now what we're going to do, this was the pandemic crash, by the way. We will be kicking off the subwave 3 of the larger wave 3 from basically like 1, 2, 3, 4, 5. I'm gonna put this on the side so that it doesn't confuse you guys. Okay, so second wave is done. First wave, second wave. 1, 2, 3, 4, 5. First subwave of larger wave 3, ABC. Second subwave of larger wave 3. And then watch. This will be the third wave of larger wave 3. Third subwave, which we're gonna start. You can likely say that from here to here, this is the first microwave, second microwave, third microwave, fourth microwave, fifth microwave. And I see the third microwave by itself is like bonkers. It went from like 10,000 to like 40,000 when it was unfolding. And you can probably see a very proper 1, 2, 3, 4, 5 of itself. It's naughty. It's a naughty, naughty, naughty microwave. It's very, very powerful. Are you able to like properly visualize it now? Like as a 1, 2, 3, 4, 5, which is unfolding? If it's hard, I need to know so I can like explain it again. But your imagination needs to kind of run wild at this point on how powerful like the subwave 3 of the larger wave 3 can be. In Bitcoin, yes. Bitcoin is an asset. Okay, so commodities in general, commodities have a unusually strong wave fives. Equities don't. Bitcoin is like a commodity. Gold is a commodity. Silver is a commodity. Soybeans, cattle, coffee. Any commodity, wave fives would be very strong. But in this case, we're working with a wave three, so it's not a wave five thing. It's more to do with one, like first subwave of larger wave three, second subwave of larger wave three, and we're dealing with the third subwave of larger wave three. So you're not dealing with a wave five in this case. Like we haven't even seen the wave four pullback yet, and we haven't even seen the wave five yet. Okay. Now, when Coinbase IPO'd, this was the wave four over there with a ABC correction like that. So 1, 2, 3, 4, 5, ABC as a wave four, and you should be expecting like a wave five to form to complete the larger wave three. Okay. So over here, this completed as a 1, 2, 3, 4, 5. Fourth is pretty easy to spot, in my opinion, because that's a ABC correction, right? And you should have been getting long over here, especially at this bullish order block. I did alert longs in Bitcoin back then, if you remember trading Bitcoin with me from here to all-time highs. This was back when we were like an options trader group. I also like nailed this top over here where I was expecting like a flush to happen in the market from this top to this bottom, shorted the 0.75, took it all the way down. This was all an options trader group. Like I long Bitcoin somewhere around here and I sold it at like 50K when it hit it. I just didn't buy Bitcoin until like I think here to like 40K. From 40K till all-time high, I held it, and then I sold it all-time high again. I didn't get back in until like the next cycle was kind of bottomed out. So in this case, is this count clear so far from this bottom which we printed in December 2018? We had this first subwave, second subwave. This entire thing is a third subwave, and we're about to start a fourth subwave, and then we will start the fifth subwave of this cyclical wave three we're in. Is the Elliot wave counts clear so far for Bitcoin? Good, good. Now here, when price went down below this wave for low, that was a signal that a very big correction is happening and you should give it time. Should be zooming out and looking for a ABC type of a correction against this entire push from the bottom. Okay. So we are dealing with a, what the fuck was that? This wave four. So starting from this bottom, February 2019, wave three, wave four, and then wave five. Is that clear? Good. Now you should be shorting right there. Why? Because I was expecting a wave B to go up, and the wave B is giving us a very, very nice push. I'm going to take this out. And what is this? You should write down the name of what would you call it? What's the name of that? The red zone. When's the same bearish order block? Would you call that a bearish order block too, Mr. Okay. It is a bearish block. And from this top, I could spot a proper 1, 2, wave 3 being the largest drop, ABC for like a wave 4, then a 1, 2, 3, 4, 5. Now, I don't necessarily need to like map out every little detail. You should be able to visualize the wave structures, the little ones, which unfold. There's a 1, 2, 3, 4, 5, and then an A, B, 1, 2, 3, 4, 5 is a wave C happening all now. So you should be entering short in Bitcoin. Okay. And the wave C should be unfolding. We took out this low. So yeah, I think you could close your short position. That should be the target from the bearish order block to new lows. So good enough trade. Going back to the weekly chart, it was a straight flush every week. I was shorting all the way down back then with my FTM account. That's where FTX blew up. This candle I remember specifically, FTX blowing up. And I also reported that you should be looking to buy spot Bitcoin because it will likely start rallying back up and go for new all-time highs. I was anticipating like a wave C to be done with a wave 4 completing at some point, and we should be like starting the wave 5 of wave 3. That was FTX blowing up back there, but just one down candle which just formed over that. And then we bought all the way up again. Now this was interesting on how price is being bought back up. Now, as an exercise, I would like you to tell me the Elliott wave pattern you're seeing in the market from this bottom to like this entire push. Where, like, if you have your charts in front of you, if you're like on TradingView, you should map it out on your TradingView terminal and post your charts in the discussion floor for Bitcoin's price action from November 22, 20th November 2022 till 13th of April 2023. What Elliott wave pattern are you seeing in the market? Because this is your bread and butter pattern. You need to like master these, and if you can master this, then trading is gonna get very very simple for you. So map out the Elliott wave pattern you see in front of you, and post your chart in the discussion floor. I'll give you like 5 minutes to do it. November 2022 till April 2023. So you have a good solid rally happening from here till here for at least 5 months. You should be able to visualize it on the daily chart. You have until 10:25 p.m., which is like 6 minutes from now. 4 more minutes. Two more minutes. Let's go. Somebody post something. I've given enough time. One more minute. It's alright. You can just post whatever you have at the moment. That's actually good. That's pretty good. Yeah, that's good that you have. Yep, that's correct. That's pretty good. That is good. Well done. I would have done the same thing. 1, 2, 3, 4, 5. Yeah. And the wave 5. It's fine. Like with Bitcoin, you have to assume that the wave 5 is going to be like a pretty decent push because it's a commodity. And commodities can have like powerful wave 5s. They're not like equities where they're just like, do like a little bit of a poke and then start correcting. In commodities, you generally have a very extended wave 5 move. So you could probably spot like a triangle over here. So when you were spotting this triangle and you know that this is a wave 5 in motion, you should be expecting like a top getting printed and an extended correction to follow after that. I would be expecting like a ABC correction to start after this, which would be like that. So that was A wave, which finished. this push, which is happening, is the B wave. Now, when this AB was happening, you should have had this SR level mapped out. That's where your price action concepts really come to play, because you should be going long over here. If you're anticipating that this is the beginning of a new bull trend, that wave 4 is coming to an end, the larger wave 4 that is, from like this top, and you just spotted a 1, 2, 3, 4, 5, the aggressive entry would be to long the first ABC pullback, which happens after printing this 1, 2, 3, 4, 5 up. Would you agree? Especially when you take a fib from this low to the high, it lines up perfectly with this SR level, which we have. So that would have been like a long position entry with a stop loss right below the order block. Now, even if it came all the way back down, I would not have closed that long entry. You should actually be buying it with a stop loss below that. Expecting like a wave 3 push to start. That's the wave 3 starting. And when you take out the B wave lower high, that would be the signal that this entire wave structure, the correction is finished, and you are starting a much larger, where the hell is that? Yeah. So you're starting this macro wave 5. We just mapped out the 1, 2, 3, 4, 5 as in like the first initial wave. ABC is a second pullback, second initial wave pullback, and you are in what you call the subwave 3 of the larger wave 3. As in like this is a 1, that's a 2. We're in 3, there will be a 4, there will be a 5. Is that clear? Good, good, very good. So we're dealing with the first subwave of the larger wave 3. Now where does it end? We don't know, we'll see. It never ended. You see, it's been pushing since then. This is the first subwave, larger wave 3. As in like maybe a 1, 2, 3, 4, 5 being printed. Okay, yeah, I don't need that. I did not even post the order to sell, it just sold it itself. I was planning to hold it all the way. Okay, I think, okay, yeah, I know what it did, because the price action kind of like finished, because we're still, this is the current moment where we're setting at, right? So it just like automatically closed the position. Okay, I see what it did. Sneaky, sneaky. So point being that we're still in this. You're gonna see how powerful wave 3s can be. That we're still in this first subwave. There will be a second subwave. There will be third subwave of the larger wave 3. There will be a fourth subwave, and there will be like a fifth subwave. Do you see where I'm getting at? Like, it's a very, very decent possibility Bitcoin can like push to like 150K or like 200K in this cycle before everything is said and done. And I just need to get these out of the way because they're kind of annoying. So this is the larger cycle. this one, as in here and here, here, like that. So it's going to go on for like another year and a half before we actually terminate the cyclical wave 3, starting from like this bust which happened all the way to the top. Hold on. Is that clear in terms of Elliott wave perspective? Yeah, it's a little bit tricky to visualize it. I'm gonna reduce it to lower count. Yeah, kind of like that. So going into 2025, I would say anytime you go through like a big cycle like this, you would expect like a longer correction. Just like, when this cycle finished November 2021, it took about a year and a half to finish it. When this is gonna finish, maybe 2 years correction after that, and then eventually maybe the last wave, which is gonna like the last cyclical wave, which is gonna happen. Then the macro wave 5 of the macro wave 5, where like federal currencies will be dismantled and every country is just gonna be using Bitcoin as a legal tender. Maybe that will happen like 2030s or something. But this is the case for like a much larger bull run, right? Where it took 6 years to finish this initial wave from like 2011 when it first started to like 2017. It took 6 years. Second wave finished in about a year and a half. And we're still like kind of trading in the third wave structure. Now, keep in mind, we are in the macro fifth wave. The fourth, where are you? Where are you? Okay, here, right. So something like this. I should put a lower count on that. Then put this on a different color. Okay. So should be able to spot stuff now. I'm going to take the lower wave counts out so that you can see the bigger picture counts. Right. Is that clear? I think it's a bit clearer. Yeah. This should be a bit more visually appealing on how things are playing out. So around here, the thing I was suggesting is that this is a proper 1, 2, 3, 4, 5. Now we haven't technically went above this lower high yet. We haven't. There is a possibility of a prolonged ABC correction, as this being like an A wave, this could be a B wave, and we could go for like another C wave down. It's a possibility. I don't know if it's going to happen or not, but it's a possibility. But if you go above the wave B lower, like if you go above 72K, you're basically at all-time highs. So in that case, it wouldn't really come back down, and you would have to consider that you're just going to resume the bull run. But if it comes back down, that's a very strong case. In that case, that you're dealing with something like a 1, 2, 3, 4, and then a fifth wave is going to start. Yeah, you can argue that ABC is in because of this, as in like this can be an ABC to the downside. It's possible. My only concern is that this is a inside quarterly candle. So when you have an inside candle, you know all bets are off in next quarter. You can expect like a low. Um, you can expect this low to be taken out next quarter in July or August, essentially setting up for like a very massive run in October and November. Right, so the quarter after that, like so the July quarter can actually be down, and you could be looking at this as a wave 2, and then a wave 3 still happening. Basically, it has like 17 days or like 14 days to prove me wrong. It needs to rally in the next 14 days or so to above new all-time highs and negate the inside quarterly candle, because if there's an inside quarterly candle, then I would assume that it would go for like this low for the next quarter. And that will be the setup I'll play for like the long side. Okay, so essentially I'm looking at this as a 1, 2. This could be like a 1, this could be a 2, this could be a 3. You could be looking for like a 4 and then a 5 start in the end of the year scenario. Okay. But if it comes down here, which is somewhere around here, right? So from this SR level at 52,700, this is where you buy spot position one last time. At this order block. And if you take a fib from here to here, that's where the 0.618 is coming as well. Exactly at that SR level, which I drew out over there. So 52K, you have to go all in in that case. We'll see how it develops because Bitcoin is kind of behaving by itself. It's being independent. It's not exactly behaving according to what Nasdaq is doing. I could argue that if you don't make a new high, it could come down and start accelerating down till here. That's where I will be buying spot position in Bitcoin and looking to target like much higher prices. Like while it's been like correcting, the 2-week RSI is like still overbought. It hasn't really sold off. Same thing with the 3-week. The monthly as well overbought. The only correction we have seen is like on the 3-day and on the daily. So you need to see like a daily oversold condition to really reset the higher time frame averages, and then look for a massive rally to start going into the end of the year. Okay, so that's like an insight of what a macro wave 5 would look like. That the macro wave 5 is just unfolding. It's not even there yet. Like we're just barely above all time highs, and I think the real acceleration is going to happen. Just like I explained to you how the macro wave 5 looks like when it really starts going. So what we've done so far in Bitcoin's current scenario is we have finished mapping this 1, 2, 3, 4, 5. We need to see like an ABC correction for like a wave 2. That's what I'm looking for. And then from there, we start this parabolic run up, which takes you to the exact wave 5 top. This is what we're in right now. I mean, we kind of just did the 1 and 2. We are in the initial subwave 1. Then the subwave 2 is supposed to happen for the larger wave 3, and then the subwave 3 is going to unfold. this one. So exciting times ahead, I would say, for risk on assets. And this also coming closer to a point where the Fed is supposed to start cutting rates, and that will like start stimulating risk on assets. So Bitcoin has more of a independent outlook to it because we just had ETF approved, the IBIT ETF. So in the IBIT ETF, here is another exercise for you guys. Go to IBIT ETF and map out the Elliott wave count from this bottom to this top. I will give you like 2 minutes to do it now because last time was good practice. I think you should be able to do it within 2 minutes. So you have until 10:45 p.m. to get it done. And I bet on daily chart, January 22nd till 13th of March. Complete the Elliott count. I'm waiting. One more minute. All right, time's up. I need your charts based on what you marked, and we'll assess it now. That's actually a very good attempt. Good job. It's a solid attempt. Anybody else? Now's the time to post it. Just post it. I'll see how convincing it is. Okay, there are some things you need to consider with the one you posted because you're thinking that this entire consolidation is a wave 4. There is one discrepancy you need to be aware of is the time factor. You have to think of wave 2, like if you're considering this as a wave 2 pullback, the time spent on this wave 2 pullback is 11 days. So if 11 days is the time being spent on wave 2 pullback, then wave 4 in comparison to wave 2 takes like about 3 times more or maybe 2 times more in time to play out. But if you measure the time taken from here to here, it's a lot longer than even 3 times of that. It's like at least 5 times. So that means this is something else. It's not exactly like wave 4. Because the time factor needs to be considered as well when you are mapping wave 4s in harmony with the price action. So in this case, what you could do is you could view this and this as wave 2 and wave 4, and this entire move as a separate wave 5 because Bitcoin generally does a strong wave 5. Any one of those counts is acceptable. Like you could argue this is a 1, that's a 2, that's a 3, that's a 4, and that's a 5. Where some of the stuff is missing in between because of gap ups, right? As price was like gapping up in between when pushed. So you cannot really see the middle price action over here. What I do see is this sharp sell-off in between. So I don't know how to account for it. But it's acceptable to think that this is a 1, 2, 3, 4, 5. What I like a bit more is because when you take a fib from this low to that high, this sell-off came till 50% before it went up. So that makes me believe that this is a wave 4 and this move was wave 3. So for some reason I have to include this as a 1, this as a 2, that's a 3, that's a 4, that's a 5. That's also possible. Even though wave 3 is big enough in size, wave 1 is big too. I don't particularly like that, but it satisfies most of the criteria. So in this case, for wave 1, I could probably spot this as a 1, this as a 2, that's a 3, that's a 4, that's a 5. It's possible you can do it. But there is something I will teach you now, which should help you understand Elliott wave a bit more. When you're dealing with a crisis in a situation where how do I adjust the count over here? Like, do I use this count as in like a 1, 2, 3, 4, 5? Or do I use this count as a 1, 2, then this as a 3, this as a 4, and this entire thing as a 5? How do you like decide between both of them? Because these are like two alternate counts. Compare it with Bitcoin's futures. I'm not saying spot, I'm talking about Bitcoin's CME futures. Because CME futures represent, see when you type BTC, on top there's futures. The first one is the CME futures. That's what you want to open. Okay, so the ticker name for that is BTC1 exclamation mark. And futures are closed over the weekend. So there is no weekend price action, but they're open 24/7 during the week itself. Okay. So when you compare CME futures with IBIT, it gives you a proper range of price action, even the overnight price action. So this bottom is this bottom over here. This top is this top over here. So whatever confusion you might be having about price action, that's going to go away when you're looking at continuous price action like this, right? So when I look at this low, which is this low over here, you can likely see this hook being formed. Like, there's a push, a pullback, and then a push happen over here, which is not really visible over here, right? So in this case, I can like properly spot a proper 1, 2, 3, 4, 5 like that. And if I take a fib from this bottom to this top, it comes to the 50% and then goes. So I can see a very clean 1, 2, 3, 4, 5 on the BTC CME futures like that. And if you go down below here, from this low, you can see this bounce over here. The market pulls back, rallies, pull back, rally. So what I would generally do is that any pullback candle, I isolate it, and then try to look at the market. This is one pullback. Others are like up candles. So it's easy to mark it as like a 1, 2, 3, 4, 5. Any single pullback candle is like a wave 1, oh sorry, a wave 2 or like a wave 4 pullback. So this single pullback candle is a wave 2. It never went below the starting point. This pullback is a wave 4, never went further below. Then a punch up, then a pullback happened all that. And then you can like treat this as a wave 1 by itself. So my point being, when you look at the subdivisions, this has a 1, that's a 2, that's a 3, that's a 4, that's a 5. So the CME futures would like come to your rescue when you can't make head or tails out of the ETF chart, which has like a lot of gap ups in it or gap downs. Because this continuous price action would definitely give you more clarity. And we know that there's some kind of an ABC correction going on because price is now in a consolidation kind of a phase where it's not rallying, it's not dumping, but it's like just going sideways. And it could be an argument made that this is an A, that's a B, could be a C being printed very soon. Right. So there is something which you need to be considering for Bitcoin now. If you go to the CME futures, so we just established that this is a very proper 1, 2, 3, 4, 5, right? And we also established that this could be a 1, 2, and we are in like a wave 3. And we also know this is an ABC correction over here. So if we get a situation like this, where you have two bullish impulses, like we understand this is a bullish impulse, there's a pullback, there's a second bullish impulse. Could you argue that what we have done over here is this is the subwave 1, subwave 2. Now, would you make an argument that this is a subwave 1, that's a subwave 2, and this is a microwave 1, and we're undergoing like a microwave 2 pullback in a subwave 3 fashion for this larger subwave 3? Could you possibly interpret that? Yeah, that's a very, very distinct possibility you have to entertain, where the market is in a parabolic phase, yes, except most people are not realizing the opportunity they're missing out on if they don't have some kind of a long exposure in the market, where we understand that this is a first initial impulse, second initial impulse, and we know that this is a wave 3 in motion because we already took out all-time high. So you could treat this as a first subwave, second subwave. This is where the ETF came out. First microwave, second microwave, and then the pullback which happens, you could be getting it on the second microwave's pullback to ride the third microwave, then a fourth one, then a fifth one, which could possibly be very, very strong actually. Yeah. Now you see how knowing Elliott wave gives you a forecast for the coming 6 months or like a year or so if you understand which part of the cycle you're like trading in. And your entries are made precise once you apply Elliott wave with price action concepts, because I understand that if it comes back down, I'm gonna take it out. This pullback handle over here is going to be a bullish order block. So if it comes down there, I would be expecting this microwave 2 to be finished. Get long over there with a stop loss right below there, below 49K, and I would be well on my way to take my position up for microwave 3 off the subwave 3, off the larger wave 3. Like, this is how precise you can be with your trading when you are trading in accordance with higher time frame concepts. Okay, so this is where Elliott wave really struck a light bulb moment, a light bulb moment where you are dialed in on every step of the way as the market is unfolding, that you can interpret every weekly candle, every daily candle for what it is, and be like, where exactly is the market, in which phase it is, and how I should be like, risk managing my position. So I currently haven't been trading full time on BTC because I understand that it's in a choppy phase and it could like go down potentially. But once it starts going below this low, you will see me getting more active in it. And I have like my alarm set up, whatnot. I still like look at it on a day-to-day basis, see what it's doing. Like, I think when Mac asked me, where is Bitcoin going to go? I mentioned that, it's going to go for this low, 66K. When it's like setting over there at about 70K. It tapped it, then it bounced. But since it did that, I am kind of on the page that it's not wanting to go anywhere. Like this order block or whatever that is printed. It should like stay below that for now, is what I'm thinking. And if it stays below that, there's a possibility you keep running down lower, take out these lows, take out these lows, and then go into that. But it's not going to do that in like, one day or even like, in a week or so. It may take like 2 weeks or maybe 3 weeks to get it done. But it saves you like mental capital. It saves you like a lot of energy of wanting to be in the market. I know this is not the time to be in the market. You just need the pattern to actually develop a bit more. You need more data. And similarly, when I was looking at BNB, the same setup is sitting in BNB. I'm looking for the wave 4 pullback to happen. So when you have like multiple setups like developing in like multiple asset classes, you don't feel the need to FOMO, which is like, fear of missing out, that there is nothing which I'm missing out in the market at the moment. Okay, so this is what Elliott Wave can bring into your trading of what I've discussed so far, where if you can like map out the bigger wave counts and understand which part of the cycle you're in, because wave threes are massive. Like I think you're beginning to finally appreciate on how strong wave threes can be in equities, in S&P 500, and in Bitcoin as well. And especially when you know that it's a macro wave playing out in Bitcoin, which is even more massive than equities wave threes. That's where you begin to appreciate Elliott wave a bit more. So if you can spot that if something is undergoing like a larger wave three, and you can like subdivide it and tag where exactly is the subwave two, where is the subwave three about to start? Are you in the microwave one or in the microwave two, or is the microwave three happening? Like you will know which phase of the market you're in and how far gone is the trend in this case, and then go from there. Right. So it gives you like some kind of a roadmap with like a flashlight in hand and like even further arrows down the road, like where exactly you should be turning left or right, or where you should be expecting like an exit in the market and getting out and stuff like that. So it gives you some kind of a guided map tour of the entire city, which when you're trying to go from one destination to another. What price action does is basically giving you like bus stop numbers, like which bus you should be taking to go to the other destination. Like it would help if you understood that the number 41 bus you took is going to take you where, and when you get off that bus, which other bus you should be taking after that. So that's what price action concepts do. But in order to understand, well, I got on this bus, I have to go to the airport. From the airport, I have to take a flight, go to the other city, and from there, I have to like rent a car. From the car, I have to go to the hotel. From the hotel, I have to take up a taxi to like meet my friend. That's what Elevate is. Like it's giving you the pit stops along the way. That when exactly you should be like anticipating that you're going to be going for like a plane ride from like the microwave to like a microwave three, and when you should be getting off from the plane and going to the taxi, and then from taxi to the hotel, and from hotel to like meeting your friend and all that. That's what Elite Wave is. Like it's like your complete itinerary. All right. So I hope this is more of an eye-opening experience with how trading is approached, at least in my world, on how I approach it. And this is not something which is like taught by anyone. I would say this is not how I learned it. It is like all self-developed, the way I approach trading myself, because this is my blueprint on how I do it on a daily basis. And if you like it so far, I would highly, highly encourage that you practice it with me and share more insights as you come across with it. Because we're just approaching more so the end of the Elite Wave session. So with the Elite Wave concepts, I maybe have like one or two more sessions to do before we conclude the Elite Wave concepts. And the next session, which we're going to do, is going to be after at least 10 days because I'm going on a trip. I have a wedding to attend for one of my close friends. So for next week, I won't be available, but we'll resume our session from like Thursday the week after, as I return on Monday next week. I'll still post my updates on the markets, but for the educational sessions as well, they will resume on Thursday the week after. And the Thursday and the Sunday the week after, I'll conclude the Elliot wave session. And then from Elliot wave, we will transition to cross-market analysis, which will take about a month to complete. And in cross-market analysis, we will be comparing asset classes to see how to apply cross-market analysis to actually ride the trends in asset classes which haven't really caught up with the main ones. So we'll discuss cross-market analysis for like a month, and then after that, the mentorship is likely over, where I have like given all the concepts which I use in my trading, and you're good to go from there. But at least at this moment, at this current moment, I've covered at least 70% of what I do with my trading, and you see me apply these concepts like day in and day out when I apply it to like take my trades every day. And we use the price action concepts with the inside weekly candles, the daily candles, and the order blocks and the SR levels, reading the market structure. And now I have like given like a complete playbook on how I approach Elliott wave, and it will just require more practice to do it. But basically, the concept archives, if you look at it, the template which I drew for Elliott wave, that's basically what I use like every day, going in and out, even on lower time frames when I use that. Just like how I decipher the entire Bitcoin chart in front of you, starting from its inception, going to like the current day. There's not much more to it on what I can do. It's more so to do with you just have to give time to price to play out. And once you give it more time to play out, you will see the concepts for Elliott like coming into motion. The only obstacle in the way is just time. Like I played everything on like a full replay mode at 10 times the speed. But in this case, real markets don't move at 10 times speed, right? Like you have to give it like real time for it to play out. So the best way to actually practice it would be to take the speed of this replay button when you put it out, and instead of going on 10 times, go on 0.3 times or like one time, so that you give some time for your analysis to actually be done on the chart, and then doing the replay mode and then seeing it happen in real time as it unfolds. But because I've tested my concept so many times, I can go on 10 times speed and I can understand what's happening in front of me. Like it takes years to actually come to a year. Okay, I started developing this about 2.5 years ago, 3 years ago. So I have like thousands of hours worth of experience in me over you guys who are just starting out, right? So in order to get till here, you have to like put in the time. You have to put in the experience mode. You have to put in hours and hours of work to register the data in front of you and see it play out in front of you. So once you put in that time and the effort, you will see the concepts play out in front of you, and then you will like try to refine it based on what sticks with you with your risk management strategies. Okay, so that's more to do with personal experience rather than just me telling you what you should be doing. But the real concepts which I've discussed over the mentorship series, they remain the same, regardless of which time frame you use it on. Like I've used these concepts on the weekly chart, the bi-weekly chart, since like the beginning of time for Bitcoin, and I did the same thing with the S&P 500 since it bottomed out in October 2009. So if they work in different asset classes, that basically means that the algorithms that are driving these asset classes, they're centrally controlled, and there's one entity which is like running the entire financial complex globally. And if anybody tells you that the markets are random, they're not. They're not random. They're all algorithmically controlled. There's no such thing as the retail traders controlling it because there's thousands of them trying to pump shit up and whatnot. It doesn't work like that. Sorry to burst your bubble if that was the impression. But there are big entities who are controlling it, and it's like a giant club. It's not one entity, I would say. It's like at least 15, 20, or maybe even 40 entities which are like interconnected with each other, and they're pass information. It's like an elite club. Like BlackRock is part of it, State Street, Vanguard, Fidelity, Bridgewater, all the bigger hedge funds, and then these are like the cool guys in America, and then there's like the cool guys in Japan as well. There's the cool guys in the European Union as well, and they kind of like have rivalry with each other, and they like control markets in each and every sector, but they kind of like understand that we have to share the information with the cool guys in the other club as well. It's like kind of like that. Okay, so it's like Gryffindor or like the Harry Potter clubs, right? The main big clubs, and the main big clubs like the big players. It's kind of like that. Like Gryffindor's there, or like I don't even remember the names, but it's mostly like that. Okay, so they're kind of like competing with each other, but they also like control the entire global financial complex within each other when they're like competing. So Elliot kind of like gives a snippet on how they're moving the funds around and whatnot. But when I put it like that, you're like, well, we're kind of fucked if they control everything, because if they control everything, they're never gonna like, let their money slip away into our hands. But the good news is if you learn how to play the game the way they play it, then you're gonna earn money the same way they earn the money. It's just gonna be like a fraction of it, but the fraction of that money is still like very big for like individual people who are just trying to raise a family or whatnot. You don't really have to become like, multimillionaire to lead a good life. Even if I'm getting like, 300K a year or 400K a year, I'm happy with that personally. Like I don't have to go for like, $1 million a year or $2 million a year to like lead a good life. For me personally, is what I'm saying. I know Vince would have like, a target of like $5 million a year minimum. That's what he wants to pull. So, but it's more so to do with having a backup plan, that it's something like it's a skill you can learn, and when you're good at that skill, it can definitely support your livelihood. But you need to put in the time and the effort to actually get till there. It's not gonna be coming to you overnight. Like it didn't come to me overnight, but just like in a month or so, I learned everything there is, and I was like a pro trader all of a sudden. It doesn't happen like that. You have to go through the whole cycle and the phases of experiencing what drawdown may feel like, of experiencing what patience is all about, experiencing what are the high quality setups, what are the low quality setups, when exactly you should be like sitting out in the market, when you should be like going in. If you would notice, I've been like very hands on with equities, but I haven't really been like, doing anything in crypto, because I understand which kind of a cycle is happening in crypto. I understand which kind of a cycle is happening in equities. So with the NASDAQ, I think I already mentioned that, we're in wave five. So when we're in wave five on NASDAQ, I would be like, longing stuff with like same week expiration, because I know the market is going to go up every day. And that is more so what's happening with NASDAQ. And I also know that NASDAQ is likely going to go to um, give it about 3, 4 months, I would say. Maybe till November, you would be sitting at 23,000 on NASDAQ. That's the draw in the market. That is where you're heading till. And it's very possible that what the market is doing right now is just like a one, two, three, four, five, like that. That's a very good possibility. It's doing that. So if that's what we're dealing with, why would you not try to profit off of it? Which is why I was like, so hands on with equities that I'm like buying swing option calls or whatnot, because I understand that, this is where they want to take the market eventually till. Like whatever this drop was, this was the bottom of the year, or like a higher low of the year in comparison to this one, and they're motivated politically to take it up till now. Like it takes experience to like learn all this. I wouldn't say that getting this information would be easy. Like at least till 20,700 is like the midway target, and then after that 23,000 is my target eventually. From 23,000, if we're done with the elections, then I think you would go some kind of a consolidation before the next move up happens. But there is something I wanted to discuss with the Apple. I was waiting for Jeff to actually come in here. Though you should ask Jeff if we can hop on the live stream, because there was something I wanted to discuss with whatever's happening with Apple. Um, that will be worthwhile. I know he's too cool to be attending my live streams anymore, so I don't even like bother pestering him. But for Apple specifically, I think he should get to know those if he's planning to position in that. Yeah, look at that. You joined. So the information which I've got on Apple is insanely bullish, like really, really insanely bullish. This is not something which the market is learning about. It's not something which most people would even know about, but there is an insane power move which Apple pulled in the last week, which not many people are actually appreciating. Like from what I've read on social media, like whenever Apple hosts an event, I pay attention to it because I'm like a long-term Apple supporter. Regardless of what Apple was doing in the past 6, 7 months, I I refused to believe that Apple would not do something with the artificial intelligence when that new tech came out because it directly affected Apple's line of business. So I was just so contemplating, are they going to release their own artificial intelligence? Just like, Google made its own artificial intelligence instead of um, partnering up with ChatGPT or borrowing the tech. Meta made their own artificial intelligence, which is like Oculus is what it's called. Something which is Meta has its own Quest something for artificial intelligence. Twitter, Elon Musk Twitter has its own artificial intelligence, like Grok, and Microsoft basically bought ChatGPT. I don't know if it's bought or something, but Microsoft has a partnership with OpenAI because they've been funding OpenAI to develop ChatGPT. Like they've been providing billions of dollars for them. But I think something very, very pivotal happened last week, which is likely shifting the power of balance in Apple's favor significantly. It's the same kind of an event which happened in 2005. I distinctly remember. I only remember because recently Apple announced that they will no longer be using um, Intel's chips, and they shifted to Apple silicon chips primarily. Like they will be developing their own in-house chips to power up their processors, and they were like insanely powerful in comparison to any chips on the market. Like I remember when the M1 iPad Pro came out, which is the one I have, I'm still using it. Like it came out in 2021, and it beat the market by like a very big margin. Like I instantly gave up my what you call like a Surface Laptop 3. It was the most powerful system in the market back then. And I paid $2,200 for my Surface Laptop 3 with the highest specs possible and whatnot. And Apple just released like a M1 iPad Pro, and the specs of the M1 iPad Pro were almost double the amount in terms of performance with my laptop, which I had in my hand. And I was like, holy shit, what the fuck just happened here? Like, my M1 iPad Pro, it costed me maybe $1,300 to get the topmost model, and it was beating my laptop in terms of every core performance you could measure. And it's like half the price point in comparison to what Microsoft had rolled out. And I'm like, I cannot stay with the Windows one if I have to look at the features which the iPad Pro was offering with the M1 chip which they had just installed, and the entire industry kind of like shifted from there when Apple released that. So what led to something like that happening because Apple released that in 2021, and you can like likely see what Apple did from there. You could map out the elevator count for Apple. Like this is a very proper 1, 2, 3, 4, 5, which happened after Apple rolled out their own silicon chips, which they installed in like the iPad Pro, they installed in the Macs, the Mac Mini, and even iPhones. So this power move which Apple pulled, it basically took the stock another 50, 60% up. And they did not even have to do any share buybacks back then. But before that, Apple was specifically using Intel chips, which was from 2006. I think they announced their partnership somewhere around here in October 2005, and they started rolling out. No, sorry, October 2006 is when they announced it. And from January 2007, they started rolling out those computers, the new MacBook Pros and the MacBook Airs, which came out in the scene with Intel powered processor, the dual processor. And basically, Apple started competing with Microsoft in terms of computers because they partnered up with Intel back then. And Apple stock went up 300% in almost a year. Not a year, but like you could give it like 2 years from there. Because those chips got better and better, and like they started like grabbing market share from other companies because of what they were doing. So I see a similar power play happening over here because last week Apple announced partnership with OpenAI, where they are now integrating ChatGPT in across the board in their entire iOS framework, in their iPhones, in their laptops, in their iPads, in their like the Mac Minis, which is the brick test PC station, and the iMacs. Like just talk about it that you have artificial intelligence available with Apple because of ChatGPT. So Apple, what they're doing right now is the similar thing which they did back in 2005 when they understood that there are other power players in the industry which they cannot compete with at the moment because they don't really have the infrastructure to compete with them because Apple is like coming out with like their laptops are not up to the mark with what you call like Windows 98 or Windows XP. Like Windows was like the behemoth back then. Like nobody would use Apple's laptops or computers as much because Windows performance was like way superior over any Apple product back then. But Apple tried to bridge that gap, understanding that they're not the front runner in this case. Somebody else is the front runner. But they joined forces with Intel to like bridge that gap to like get a powerful processor so that they can actually provide the same performance which Windows laptops or like Microsoft was like making at that point. And it worked. Like it worked brilliantly for them. So where am I getting with this? What I'm saying is that Apple leveraged whatever technology they were getting from Intel. What they did is they learned. They over time, whenever Intel was providing them their hardware, their infrastructure, like it was being installed in MacBooks and whatnot, Apple was putting in money behind back doors, reverse engineering these chips which they were receiving from Intel, and they were basically making sure that at some point they develop their own in-house tech which will replace Intel, and they would have their own technology which other players are going to want, and that would basically bring market share even more to Apple. That is what Apple did back in like after the recession happened and whatnot. But over time, I think 2015 is when they really started shifting away from Intel and they started like making their own chips and they were funding projects or whatnot to like have their own in-house tech for their own products. Now I see a similar thing happening over here. So Apple is realizing that what Apple has done in the past decade or so, they have built such a strong community based on trust that If somebody has an Apple iPhone, they are locked in the ecosystem. They do not want to move to Android ecosystem at all because their iPhone is locked with their iPad is locked with their MacBook is locked with the iMac, like with Apple TV, and like they have really matured the market than it was like 10 years ago. So what Apple figured out in this introduction of ChatGPT in the past year or so, they were like, we'll let everybody run wild and come up with the best version possible of artificial intelligence and whoever can bring it up. They were in talks with Google for the Gemini. They were probably talking with Meta as well for their artificial intelligence product, and they were in talks with OpenAI as well. OpenAI proved their capability as being the leader in the field with the development of GPT-4, with the development of GPT 4.0, or whatever they're doing. And Apple was like, great, we know you're the leader. So what we're going to do is we will offer you an insane amount of consumer base, which is, Apple is present all over the world. The products are probably in the hands of like a billion people combined globally. And in US specifically, their products are in the hands of like at least 60% of the Americans who are using it. Like Apple actually has a monopoly in US in the phone market. Like Samsung does not really come close to like beating the Apple monopoly in US. So Apple leveraged that, told OpenAI, bring your technology into the Apple ecosystem. We're going to give you free access to let you use your technology with Apple ecosystem. We will pay you for your services because just like when Google became a big thing, um, Google understood that people are not going to want to buy Google's Pixel phones or like their products like Google to use Google Chrome and whatnot. So Google started paying Apple $20 billion a year to like put Google as the default search engine or Safari. So when you get an iPhone and you open like something and you try to like search something, it's not gonna go to like Bing or like DuckDuckGo or like other browsers. It will like default it's gonna go to Google because Google pays $20 billion a year to Apple to use Google search engine as the default browser on Safari. Now Apple is using that technique with OpenAI because Apple is like, I have like a lot of cash on my hand. I have about $150 billion sitting in my hand. What's like a few $1 billion which I can like give to like OpenAI to like rent me their technology to be used on Apple systems like across the globe. They will earn like a small commission out of it, and they will be rich. They will be flooded with money, and they're gonna be happy with that. But it will give me access to their secrets when they implement ChatGPT in my systems. I will know how people are using it, how they are wanting to implement it in their lives. So this is like a test run Apple is doing with the ChatGPT and OpenAI technology. So in a year or so, I figure that they will run all the tests possible. And believe me when I say it, Apple has the top most intelligent computer scientists and software engineers on the planet working for them because they afford to have them on their payroll. Okay, like Apple has a lot of guys, just like Microsoft does. All right, but what Microsoft does not, they don't have the iPhone. They don't have the phone market in their hand. Apple has the monopoly in that. Even Google does not have the monopoly in that. Apple has the entire monopoly in the phone market, and they understand that if you have to introduce ChatGPT into the hands of like billion people, they will use it if you give it to them in the iPhone, but they won't use it independently because people are like lazy. They don't want to go to like to like websites or something and try to figure out ways on how they can like find productivity out of something which is actually like very productive. But if you give them like hand holding kind of a stuff that you can like install it in their applications, like Apple has monopoly in the app store as well. Like any app which is on the iPhones, it comes from like the app store which is controlled by Apple, so the developers don't get most of the money. Like they have to pay 30% of that fee to Apple. So what they're doing is they're letting ChatGPT come to iOS system. They will tell every developer to start developing apps using ChatGPT, which will be flooded into the Apple ecosystem as well. And once they figure out the power behind, this artificial intelligence, they will start developing their own artificial intelligence, which is what they're calling Apple Intelligence. And within maybe a year, maybe 2 years, Apple will have its own home built technology, which works way, way better than every other available artificial intelligence product on the market because they would have figured out what the general consumer actually needs in their daily life to life stuff to leverage this technology. What the other companies have not really figured out at this moment is how to actually implement ChatGPT in their daily lifestyle to boost productivity. But they know that this is very productive because there's so many examples they've found out that how this can be used. But most of the people actually using it for the benefit, they're like high profile engineers. They're like I don't know, C-suite executives or maybe software engineers, maybe computer scientists, or like doing heavy coursework. But the most people who are not able to actually benefit from now are like simple people, like people in their 60s, people in their 50s, people who like about to retire, who are not actually uh like who basically who are like dependent on their kids for like intelligence. So like whenever something gets wrong on my mom's phone, like she would call me and she would like try to figure things out. It's kind of like that. My mom was never gonna like learn how to use ChatGPT, but she would definitely know how to use an app which is powered by ChatGPT, kind of an intelligence, because Apple would like force them to actually learn in a very simple way, just like they do with every other thing which they've done in the past. Like I can give like so many examples, just like the weather app or like the calculator app, and the way they like build stuff the Apple way. They install their Apple Magic behind it, and everybody like loves it because it's very simple, it's elegant, it's nice, it's pretty, and it's not like geeky. Just like Android has like a lot more features. Definitely, Android is like flooded with like massive features, which would actually help you. But it doesn't really relate with the middle generation, which is like not as tech savvy. It's for most for the younger people who are like just graduating college. They're doing engineering courses like computer science courses and university whatever, and they could like, use those features. But the regular consumer cannot really like leverage out of those. So Apple knows that, and Apple is like using it to their leverage, and they're like letting ChatGPT come into iAssistants, maybe even for free, because I think OpenAI is going to benefit enormously if they can like let their technology be in the hands of like a billion people, right? So my thinking was that in the coming year or so, you need to be looking at money flow. So NVIDIA, for example, when ChatGPT was announced and we figured out that that artificial intelligence has like a lot of benefit to it. This is where NVIDIA was. Okay, so if you look at the market cap for NVIDIA back then, it was at about $300 billion. In the past 2 years, NVIDIA, because of the demand which has come from the artificial intelligence, it has gone up 1,000%, basically 10 times in value. It's sitting at $300 worth of net worth. Nowhere in the last 2 years I could have imagined that NVIDIA was going to do such an insane run up. I did not even know that kind of money even existed to be putting into a company. Like you're basically pumping $2.7 trillion in a company out of nowhere because every other asset class is like sitting at all-time highs. Like Apple is sitting at all-time highs, Microsoft is sitting at all-time highs, Google is sitting at all-time highs, even Meta is sitting at all-time highs, Costco is like way above all-time highs, Amazon is at all-time highs. So if money never left the market, where did this $3 trillion came out of nowhere? So there's like a lot of money sitting on the sidelines, ready to be going to the equities market. Now what they're going to be trying to figure out is that okay, we pump like insane amount of money in all these startups because they're going to be like building uh, AI applications or whatnot. They're supposed to be generating revenue from this new technology which has come on the scene, but none of those startups have actually built anything tangible, which is bringing in revenue. Let's say you pump like $500 billion in like different startups, and you're like a asset management firm, and you want these startups to like give you some kind of a return because you need return on investment, and the only way you're going to get return on investment is if the startup actually grows, and the startup is only going to grow if they're going to attract consumers to like use their product. But the whole issue is they cannot build a product for like a general consumer to use because the general consumer does not really get how to use ChatGPT at the moment. So Apple made this backroom deal with OpenAI. They're like, okay, our consumer really, really likes our product. Like they know how to use Apple products. So we're gonna give you an opportunity to get on board with the iOS system and mix up with our iOS framework, develop apps in the iOS system so that people, like billions of people, get to use your apps. So Apple basically gave the middle finger to all these startups where $500 billion worth of money was like flooded into because they were supposed to build like new applications and whatnot. Except developers are now gonna do it on the iOS platform itself in the next 2 years because Apple just partnered with OpenAI and it becomes insanely easy for these new startups to actually access the consumer base, which is already present with Apple. Okay. So that's where my mind is thinking like, Apple has already solved the problem that how do you get the consumers to actually get to use AI products? Because it's one thing to like flood startups with the billions of dollars to like develop products, which hoping that consumers are going to come in and use those products with them. But when you know that there's like an existing consumer base who's just going to like happily use your products, and they're just waiting for the technology to be coming into that platform. And Apple just like solve the problem and be like, we'll just bring OpenAI and then let them develop applications on our platform and people are going to use it from there. And look at the revenue when it's going to like go up from there. So the market is what I'm saying is going to start pricing in the new revenue stream which Apple is going to receive because of this OpenAI partnership in the next 2 years. Okay. It is not going to show up in the next quarterly report. It's not probably not going to show up in the quarterly report after that as well. But I can assure you, when it starts showing up, it's going to do like a Nvidia kind of a move where it may be the first company on the planet which goes to like $10 trillion mark. It's sitting at $3.27 trillion. It may triple from here because of what I saw, what Nvidia did when I started like reporting the revenue it was like getting from all that money which was like flooding into the demand for like the hardware production. But my counter argument is that Apple took 10 years to absorb all the information Intel was giving, how to develop processors or whatnot. But that's like manufacturing. Manufacturing is like a bit different. Data collection is a bit different. I would argue that data collection can be done a lot faster than manufacturing itself because running a software analysis, it takes like 5 minutes when you're like trying to assess the behavior patterns or like whatever is happening with the software or like reverse engineering stuff and all that. Like the tech is already there. You just have to figure out, how do people use it and how to like actually implement it properly. Like whatever they need to do, they could fast track whatever they needs to be done for like when they did like the entire data gathering process with Intel Core processors in 10 years. They can do the same thing with the ChatGPT's intelligence in the next 2 years or so. So later down the road, OpenAI may like dissolve because Apple's just gonna like absorb whatever information they have to give it to them, and they will like develop their own Apple intelligence, and they're gonna kick OpenAI out, and they will be the next behemoth present on the market with like an insane consumer base which is already using that technology for themselves. And the only company on the planet which can actually compete with whatever Apple is doing is Google, because Google has its own suite as well, like YouTube, Google Drive, Google Docs, and whatnot, and they have their own phone as well. That's the only company which can actually compete with Apple because of the consumer base. Microsoft cannot compete with them because Microsoft does not have like a consumer base which has like a dedicated phone in it, right? So Microsoft kind of is like lost in that phase where I feel like maybe Microsoft can like implement ChatGPT in like workstations like PCs and whatnot, which is already happening, but it's not really bringing in revenue in that case. The real revenue is developed from like applications which you develop on phones and iPads or like MacBooks or like laptops and whatnot. So if like Microsoft came out and it started developing applications for laptops and people like paying for it, then that's like an additional revenue stream. But I can definitely see like a revenue stream developing on the App Store when developers come in and use OpenAI ChatGPT to like power up applications which are given to like iPad users or iPhone users and Mac Mini users or whatnot. Like that's the first thing which the revenue stream is going to like get an uptick when OpenAI integration happens, which is happening right now. Google can do the same thing with Android, but my thing is Google does not have a dedicated consumer base when it comes to the phone industry. Like Apple has a monopoly in the phone industry. Google does not. But Google can do it with the like the PC stuff when it comes to the browser stuff or maybe like developing extensions or whatnot. But how do you? That's the other thing that trust. Trust is the main thing. Like if you were to give me an option, would you trust your data with Google or would you trust your data with Apple? I would pick Apple every day, every night, 24/7 for the next 10 years because I've done that for the past 10 years and I've been very happy doing it. I know Apple values its privacy to its core. And because of that, they are at a very, very beneficial juncture at the moment to be making this decision because they know their consumer base is going to rally behind them because of the trust they have developed with the consumer in the past 5 years. So like they destroyed so many of the businesses because they when they introduced this feature called ask app not to track because they were like these apps are like stealing your data and selling it to Facebook or WhatsApp or whatnot. So like these apps are like trying to like sell you ads and all that. So they basically introduced the feature like cut off the supply of giving your data to them, and so many businesses started losing revenue because of that. And that's where that's the difference between Google and Apple. Google is in the business of selling your data. That's why Google search is so beneficial because they want to collect ad revenue from you. So when it comes to saving your data, like are they gonna like keep it safe or not? Apple will be the obvious choice in that case. That's where Google like really takes a beating from Apple. That's where I feel like Apple has a much better hand at competing in this space on developing new technology in terms of like app user face or like a new product which is going to be like consumer centric and every regular day consumer can actually use the technology of artificial intelligence which OpenAI brings. That's where this partnership is going to be very pivotal in the coming year or two. So that's more so my thoughts on what developed with Apple in the past week or so. And what commission? I'm asking you that you should be actually buying 6 month out leap option calls on Apple. That could likely go up maybe like 40%. You could probably make like $1 million off of it. And you need commission off it out of that. Like if I'm saying that okay, look at the quarterly chart. Okay, this is where like the technical meets like the fundamental aspect. What is that? What pattern is this? I mean, we discussed this pattern in the price action concepts, and that's happening with the quarterly chart with Apple. We have about 15 days left to close this quarterly candle, which is going to be most likely a bullish order block on the quarterly chart with an inside quarterly candle with a lows of a run, and you're closing up top of that. When was the last time Apple did such a thing? The last time I can remember was over here when the pandemic crash had happened. Over here after the 2022 bottom was put in. Here during the 2020, 2012 crisis, like there was a recession or something, like a minor recession, like a hiccup. I wouldn't really say this is a bullish order block. Sure, you could probably argue it as. In Apple's history, there have only been one, two, three, four, five instances where you have a proper bullish order block formed. And what has happened after those bullish order blocks have been formed in the quarterly chart? Apple has gone up at least 5 or 6 quarters in a row when those bullish order blocks have been formed. The only contradiction is like in this case, when this was formed, the next quarter definitely had an insane run up, but you actually consolidated. So I would say argue that this is a lot better bullish setup than the previous ones because Apple has technically not been trading above the $182 mark for the past 2 years. If you go on the monthly chart, it only just broke out of this massive zone. So it's like January 2022 high. Now, this month is when you exited this top here. So Apple has a lot of room to run, like on the monthly chart itself. Like you're talking the quarterly RSI is turning now, and you're talking that it can go insanely overbought like it did back here. So when the quarterly RSI turned back then, it was sitting here. And if you're talking about taking it all the way up, at least from this quarter till here, that was a 72% run over that. And it kept running after that. Like, let's say you had this bullish engulfing and you got long on the next quarter. The next quarter gave you another 50% run up. This one, that was a 20% run up. So if you want to get leaps for the next quarter, but I would wait like 15 days personally because I'm not wanting to be pushing the button right away. When you look at the weekly chart, it's like 3, 3, 6, 8 consecutive weekly candles in a row. I would personally wait for at least one or two down candles before I buy the leaps. I would personally get December expiration for 250. Even if you're like targeting 250, it's like a 17% run up. I'm saying that it could run to like at least 300. Like you're talking like at least a 50% run up. And also don't forget, we are also closing the 6 month chart. And if you remember the teachings from my price action concepts, this is a bullish order block. The next bullish order block, which is forming on top of the previous bullish order block, is called a propulsion block. And it's a pretty decent setup. I could assume that the next 6 months is likely going to be an expansion of the upside. Not to say that you're entering like the election season and you know there's going to be insane amount of liquidity being pumped in the markets. And also Papa Powell is like giving signals that they will be cutting rates going into like election or whatnot. So the monetary policies on your side, there's a fundamental catalyst behind that as well. There's a technical setup behind that as well. That's like a 3 out of 3 confirmations coming in your way. So what more do you need? Like this is the best setup I could see in the market, which can be offered. And I think some entities did realize when I mentioned that Apple is going to rally after the ChatGPT integration. When the announcement came out, this is what happened to Apple. Like it sold off, and not many people were actually realizing at the moment that this is the AI moment for Apple. And what has happened with the AI moments for every other company? Like Microsoft has been rallying hard since like it bottomed out because of ChatGPT integration with PC and whatnot. And this is the down candle big. I don't know, I'm buying option calls on that. That there's no way it stays down in the week because not many people were realizing how big that news was. And behold, like the next day, big funds they were like rushing into Apple because if I am able to realize this, there are people with hundreds of millions of dollars of research teams who are like feeding them information which even I don't have, and they know something too, which is why something like this is happening. Like a $3 trillion company going up 15% in like just 2 days. Like how much money it takes to like pump $3 trillion worth of a company, like 15%. I think about $500 billion or like $200 or $300 billion. It's easy, I would say, which like flooded into Apple. 450. Okay, $450 billion. Jeff says that's an insane amount of money which just went in. Like it's more than the GDP of Nigeria, which is the largest country economy in Africa. But yeah, like this is something big happening in our lifetime, and I feel like probably not many people realize at the moment. But when they start realizing it, that will become like a self-fulfilling prophecy, just like it happened with Nvidia when it started like showing up in the what you call. I think this is where Nvidia reported their earnings, where the revenue just like insanely increased, and there was like a massive gap up on Nvidia, and people were thinking, okay, maybe this is like a fluke or something, but look what happened to Nvidia after that. Like since then, reported that increase in revenue because of the whole ChatGPT introduction, and every startup wanted to like buy chips from Nvidia and whatnot. It has gone up 233%. That's about four times the value. So believe me when I say it, the capital will come in. Like there will be capital coming into the equities market because of the new liquidity injections and whatnot. But there will be like money flooding from other companies into Apple because they will be like, well, we gave this money to other companies, like, do stuff, but we're not developing revenue, developing applications or whatnot to, like, leverage out of artificial intelligence. But we see Apple is doing it. So let's go and put our money behind Apple now because they have like a working product, which is actually like generating revenue out of it. So it will become like a self-fulfilling prophecy. Then they will not be like looking at what kind of revenue is coming out of it. They will be like betting on the future revenue growth for the next quarter, like 6 quarters from now, whatnot. Just like Nvidia is kind of like that at the moment. So that's more so what I figured from the partnership. But it needs to be confirmed. I think the confirmation is going to happen in September when the new iPhone gets launched out and the new iOS system becomes public. Because when I see it in my own hands and that it's actually there, that's where it's real and it's happening. And there will be like a flood of money coming to Apple because of that for the next year or two. All right, so that was more so like my Apple rant in terms of what happened this week. Hopefully you found it insightful. But no, I'm not getting any commission for that. If you feel like you made money out of it, I'll charge you commission. Like I will be happily taking 50% of your profits if you make money out of it because of my knowledge. Holy shit! I spent a lot of time today in the live stream. But yeah, guys, I think this is pretty much it in terms of what I wanted to discuss. So this will be the last stream I do, as I'll leave for Turkey, Istanbul on Sunday. I will be in touch, like I'll be posting stuff or whatnot, but I will be like a different time zone. So you'll probably be sleeping while I'm awake. But I will catch you guys in like a week. Like next week I'll not be here, but I'll return on Sunday the week after, and we'll catch up from there. I will be here for tomorrow and on Friday. So if there are any developers in the market, I'll post about it. Until then, take care, guys. I will talk to you later. Yeah, by when? Yeah, hold on. It's 248, 295. I would say $250 strike for December. That's a good leap for me personally to take. You could probably hit that within a week. I mean the way it's like behaving, but I would give it like at least the next quarter. I'll wait for the next quarter to open before I take that. Um, Most likely by November, you could be sitting at 300. It's a possibility. It's a possibility, yeah. It can definitely be there by November. If not, then the first quarter of 2025 by like March. What do you mean? It's a 24% move. 41 dollars. But that's also taking into account that majority of the movement was carried out within a month instead of the entire 3 months. Like the second half of May till June mid. No, so May and yeah, you could say 2 months. It's been 2 months where it carried out the movement. But the propulsion block which I was talking about is on the 6 month chart, not 3 month. So the 6 month chart was the bullish order block. This one. And the propulsion block is this one. Basically from July 2023 till July 2024. The pullback for like almost a year. And I'll remind you one thing. This quarterly chart is reminding me of Costco, where you have this one pullback, up, pullback, up. If you look at Costco, this was the consolidation of that before it like went bonkers. This is on the quarterly chart, by the way. So we are in the middle of like closing this quarter on Apple. I'm expecting like the next 4 quarters to look like this on Apple. So same thing on Costco. You know the inversion on the RSI we just talked about. It's happening over here, and it went to overbought at the same level where it was over here. So you're looking at about from here to here. It's about 60% move in Costco. It happened in about 270 days, which is roughly 9 months. Which is why I'm like, if you want to like ride the entire trend, I would personally, uh, yeah, I think 250 for December is a very valid entry. Or what I would also do every week, just play lottos for like $500, weekly expirations. Some of them are gonna give you like 5 times return. Some of them are gonna go to zero. But okay, think of it this way: from where no, don't look at it that way. Look at it this way: you have from this point onwards, you have 6 months left worth of trading. Okay, December second week you cannot count it. December 16th is where the trading day technically ends for the year. So you have 6 months left. In 6 months, you have out of 52, that's about 26 weeks. Okay. In 26 weeks, there are 5 trading days. Or for every week, you basically have, there will be some weeks where you probably can like risk more than the others. But for 26 weeks, if you're risking $500 each, that's $13,000 in total. Out of those $13,000, how many of them do you think can like make you 5 times the return? Yeah. I'll try it personally, like one of them, not all of them, but a few setups which are, yeah, you would have to like time it. Some of the times it's just gonna be good, like the ones that time like this week, they played out very well. I mean, this week specifically, you probably would have like made 10 times instead of like 5 times, just the way it played out. Some weeks they may just go to zero, or they may not even like give you much return. They may just like close at break even. They may give you like a double return maybe. But my point is that there's a seasonal trend in place. When October starts, I would highly recommend for October till December 16th, every week just try like a lot on Apple because it may be like that's where every week is like a bonus week for October, November, and December first 2 weeks because that's seasonally speaking that's the strongest time of the year, and we will also have like an election season in November 10th. October, December is it's a very very strong lotto season, personally speaking. Oh, you gonna do that? You gonna do my job? Yeah, yeah, definitely do that. Post it in the Apple channel and like tag everyone. Okay, but hopefully, like this discussion like convinced you to like look into it. Like so you agreed with most of the decisions I made, assuming like I made a lot of assumptions because some of the things are like they haven't panned out. As in, I'm assuming they will pan out because of the stuff I know about Apple. Monthly chart. Yeah. So this is the yearly chart. You could just say that look at it year over year. Yeah. Yeah, that's not what you're saying. Yeah, so in that case, you gotta decide, do you like buy very far out the money option calls, or do you buy more closer to the money? Right. But okay, so when you going the far out then you would have to go next year, not this year. 26, really? No, not 26. Go to like 2025, like till March. Okay, I need to do that research. I haven't even looked at the options thing, so I don't really know. Yeah, I will look into it. Fuck! 400 really? In that far out? Vince doesn't believe you. So, Yeah, 100% more makes sense. I mean, 400% that would be insane. But you gotta put some significant capital behind it. You can't just go with 5K. You should at least go with 20K to make it worth your while, I would say. No, for more like 300 strike if you're going for 226 strike like that far out. That's good. I mean that's a good time period. Okay. You're not really, when you're going that far out, you also need to consider the results of the election because you're going to have probably a new administration in the office, and there will be like new stimulus injections or like maybe some kind of like a tax shuffling or whatnot, which will be happening. And I will remind you what has happened every time a new administration has come into place. The first 6 months have been insanely bullish because of it, which means that the new administration takes office in January. From January till like at least March or April, the markets are like rallying because of it. So that's also like a second factor people have to consider if you're going that far out. I'm only thinking about it in terms of what's going to happen going into like the presidential elections, which is for this year. Okay, that's not that far out, but like just said in terms of going very out of the money. But if you're going that very out of the money, like let's say December 2025, then you have to put some bigger Chuck E. Cheese behind it. For no. For December 2025, go that far. Yeah, when's March 2025 with strike. I'm not looking at the options change, so you're gonna have to tell me. So March 2025 300, it went up 66.7% today. Uh, GPT update what? Yeah, they yes, basically like that. Yeah, like they will introduce a new software in September when new iPhones come out. I need to confirm that. I think they were saying it's only for the new stuff, but yeah, I mean, I'm gonna buy the new iPhone anyways because mine is like a 14 Pro. I skipped one generation, so mine is like due for an upgrade anyways. But what is it saying similar to return? Right now it is at what? It's for Apple $300 try 225 2025 March. Okay, okay. So that's 20 times the return almost. See, I'm gonna wait personally for like a week or two, and maybe Apple comes down like another $5 maybe. No, I'm not gonna put just 500. I'll go with at least 20K, 25K if I'm going that far out. Because I'm doing all this research so I can like make a very confident call about the direction of the market. If you have the direction right, may as well go big on it. Because let's say if this 20K turns into 20 times, I get 400K back. Would you not? Like, do you not like the risk reward ratio on that 1 to 20? I mean, it's a easy. Well, I wouldn't say easy, but it's doable. Yeah. But from here to 300, how much of a return is that in Apple stock? It's a 40% return. It's doable. Like essentially, like post COVID, it went till there in 2 quarters, 52%, which was in about like it's in 6 months. So we're talking about giving it at least 9 months to do it. Yeah, you got to put some capital behind it if it's not well researched out. Anyway, so just keep it in the back of the mind for now. You still have 15 days to finalize it. Yeah, I'm pretty sure it's the beginning of the move, which is what I'm gonna wait for. Yeah, exactly. So first week of July, I think you can wait at least 1 week into July and buy it in the second week. And when is the Apple's earnings? Apple's earnings is on 22nd, 24th. Sure, that's good too. The ER, yeah, they don't miss, bro. They're not gonna miss. No. I think they're see they were in a revenue slump. That revenue slump is likely coming to an end, is what I would say. If I was looking at the revenue growth for where the fuck was that? See that every quarter they basically exited that slump last time. Their revenue was like declining for almost a year because of iPhone sales like missing and iPhones were like banned in China. Like there was like an official ban on the government um, banning and whatnot. But I think most of the bad stuff is likely done with. But the revenue stabilized after that. And if the revenue is going to increase going forward, they will be like jumping up. And Apple is very smart. Like they're the smartest in the industry when it comes to financial engineering because they understand that they are like going through like a slump and they would like use their magic wand and authorize like 100 billion, 200 billion, 300 billion dollar like of share buyback, which other companies cannot do because they don't have the cash, but Apple does. So they can like pump their revenue back into share buybacks and keep pumping the stock up. Like Apple is like a master at it. And even right now, this rally which happened, it was fueled because Tim Cook authorized a $100 billion share buyback. Like he announced it post the WWDC event, and this earning gap up happened because Apple announced like a dividend payment and maybe $500 billion share buyback, which was like, man, they have some serious chatter. Yeah, every quarter if they have to. Yeah, no, I mean there's like a blackout period, but they cannot do it going into earnings or whatnot. But every quarter they can announce that. But anyways, that's something to think about for Apple. I need to go and have dinner because I'm starving. So I will talk later. All right, good night.